Hey everybody, this is Captain Kirk, Kirk Brown with EXP, and this is...
Britt Matthew with EXP.
And so I did a surprise on you today as we started to shoot, and I said, hey, I want to shoot a lease purchase.
And I said, what?
Because it's just not as common.
And I'm not comfortable with it.
Right. And so that's what we're going to do. Most people aren't. And I guess I've had more calls than some people in explaining and dealing with our team of lenders and people that we have access to talk about lease purchase. So let's talk about that. So you think you qualify or you think you want to do a lease purchase, right? And so you're asking me,
why would people want to do a lease purchase?
Well, that's a good question because I'm here to tell you why. So, I think some people or most people start out because of credit. So maybe they went through some bad times, they have challenged credit, and it happens to all of us. And basically, they think that may be lease purchase because their friend at work told them they did one.
Right.
So there's a couple reasons on why people would want to do it. Number one would be, first off, from the consumer, credit.
Well, I'm sure the most common reason is credit.
It's the most common.
Okay.
And the other reason is obviously they're moving in town. Maybe they have another house to sell somewhere else, or there's a ton of scenarios out there.
Right.
Could be domestic, could be a number of things. But if you call me up, and this is what's been happening to me lately, at least 5 calls over the last 2 weeks,
Okay.
Brett. I'm not kidding you.
Too.
Yeah. And so we want to talk to you about that today. And does it fit for you? And why would you want to do that? So if you call me, I'm going to ask you why. And most of the time it's about the credit. So let's go right into the credit. Now, I'm going to let you know, and I'm not a lender for disclaimer, and neither is Britt. No. We're both realtors. However, we work closely with lenders, and being a good realtor is knowing about the programs available to buyers, right? So there's a couple of things we want to talk to you about the credit side. And I mean, Britt, there's programs out there right now with lenders on a traditional purchase, not a lease purchase, that people can do. And you're very well versed in that.
Right. And I mean, if you get with a lender, they can explain all of that to you. But yes, there's tons of stuff out there for you.
Yeah. And so like a VA loan, it's 100% down.
RDs, 100%. FHA is just 3.5%, and then conventional goes as low as 5%.
Yeah. And so, first off, we're going to try to educate you on that. Then we're going to try to get you some names of some people that can help you do that. So that's a good point. So basically, we'll talk about credit, but we want to make sure that, there's different pillars, even in a lease purchase, that a seller who's going to actually loan you the money and become the bank, right? Because a seller is the bank. There's no traditional bank involved in this. Okay. So the seller's taking some risk. There's a lot of liability in this.
Right.
So they're going to want to know about your credit. But they're also going to want to know, do a little background check on you. Where do you work? They're going to ask you about your family, who you are, stuff like that. References, exactly. Right. So giving you a $200,000 asset, and I'm going to want to know about it. Okay, I'm going to want to know about you and your family. And then down payment.
Right.
So sometimes people are leaning towards lease purchase because they keep hearing about a 3 or 5% deal. They have to have a house around $200K because of the space they need for their family. Okay. And so, but the down payment is really up to the seller. All right. Okay. So if we can find a deal out there as a lease purchase, and we can find something that's less than 3%, that usually helps people because 3% of this is $6,000. Right. So at that amount, I could do a 3% or a 100% VA loan. Maybe you have to be military, but RD loans, rural development loan, right? And certain areas have those. Not every area has it. Not metropolitan cities, but basically 3% down is $6,000. Now, I did one not long ago. Okay. All right, and this is how it went.
This price?
It was more than this, but basically the payment was each month $1,500 a month. Okay. Okay. Now, normally you would think that of the $1,500, you're going to do this agreement for 12 months potentially. Maybe it's 24 or 36, but we're going to use 12 months today. Okay. 12 months. Well, the seller still is responsible for the property taxes, flood insurance, if there is any, HOA dues,
homeowners insurance.
Homeowners insurance. And maintenance.
Right.
All right. Now, so maintenance is a big deal on this. So watch how this happens. Let's just say that the seller and the buyer have agreed that there's $500 a month in expenses with all those things that we talked about. So you're going to take $500 off of that $1,500.
Okay.
All the $1,500 monthly payments over 12 months, which I think is $14,400, somewhere around there, does not go towards the purchase of the home.
Okay.
Because there's $500 a month in expenses to the seller.
Okay.
So, now this could be different in every deal, but I'm just letting you know
So
this
basically $1,000 would be going
absolutely,
to it. Okay.
absolutely. So $1,000, which is $12,000 in a year, would take. You would buy the house for $200,000, and you would use that $12,000 as a down payment.
Okay.
Okay.
After the 12 months?
Absolutely, but it has to be after the 12 months.
Why?
Because it has to be recorded for 12 months. Now, I'm not a lender, again, but you have to talk to a lender about this. But this is what I'm told, is that after 6 months you decide you want to buy the house, you cannot use those dollars towards the purchase of the home.
Okay.
It has to be recorded for 12 months in the books, okay? And it has to be recorded. That's the other thing. But again, get with a lender and we can help you. Call us up. We'll get you at one. So basically $1,000 will go towards that. So now, if you do the 12 months, you got $1,000, you buy this house right here for $188,000, you go to a traditional closing then, and you buy the home. Okay? Now.
So wait. So we take $12,000 off of this.
Yes.
And so then we're financing
$188. That's correct.
So then we're using that $12,000 toward basically a down payment for that.
Absolutely. And it's actually so you're agreeing early on what the price of the house will be. So you're purchasing the house for $200, but you're giving them $1,000 each month.
Right.
Which is $12,000. So you'll finance $188 at that point in time. Okay. But the lenders won't recognize those payments under 12 months is what my point is. Gotcha. Okay. So now you need a rock solid buyer and seller protection of a lease agreement. Now we have those. Okay. So we can put those together. No problem. But you want those to protect because you also have maintenance. All right. 4 months in, air condition blows up. What happens? Who's responsible?
Who is?
I don't know, right? Unless you have an agreement.
You put that agreement ahead of time.
Absolutely.
Okay.
Absolutely.
So it could be the seller or it could be the person who's doing the lease purchase.
Absolutely.
Okay.
Absolutely. So again, you can work the deal. Now I've done them where they're family members, so they kind of know each other, but they wanted to keep the business,
right.
but they also wanted to help the other family member. That's, that can be done too. Now I want to bring this one thing up before we cut loose.
Okay.
I think it's very important to notice that there are lease purchase deals inside of our MLS where we find a lot of our information. Okay? So a lot of times builders will do it if they have too much inventory. That's a great...
I've seen that.
Right. So it's new construction. You get a brand new home and all that. Now they're going to run you through the ringer just like anybody else. But they'll take that risk because they can fix them. They know how to do all the stuff. And it's brand new. Chances of something happening are slim. However... you don't want to get caught up and say, Kirk, tell me about all the lease purchases in Lafayette Parish. And the reason you don't want to do that is because now you're saying, Kirk, tell me about Lafayette Parish lease purchase, and I'm just going to pick one of them.
Then you might not find the home you actually want.
Bingo.
You're only buying it because it's a lease purchase.
Exactly.
So why not wait the 12 months whenever you can qualify for a house and just purchase a house?
Exactly. And that's exactly what I tell people.
Okay.
And so when you call me, or you call Britt, or you call your realtor, we're going to ask you why.
Well, I always ask why from the beginning.
Exactly. And that's the reason that you want to investigate a little bit further because the general public doesn't really know what's going on here. Now, we have a lot of homes on the market today, and we have quite a bit that are actually vacant too, people that have moved out of the community. So sometimes those work, and we know how to find those. And again, sometimes you find the house you want, and maybe we can bring the lease purchase opportunity up. Okay? And then sometimes it's just better to wait 6 months while your credit is being repaired and you're working through some glitches and getting your life back on track the way you want it. Maybe it's a job you just got now or a bigger job. A number of things come to mind.
Right.
But anyway, I hope this helped out. It's, if you have some additional questions about lease purchase, I would love to answer them. I know Britt would definitely. She knows more about it than you think. Trust me, I can tell. And but anyway, so this is
Britt Matthew, where your property is my priority.
And again, Captain Kirk helping the Lafayette community find home. Thanks for joining us today, folks.